So you finally decided you want to start investing. So you download Robinhood, Schwab, Fidelity, whatever it is, deposit a few $100s, and then you get right to YouTube and start watching videos. One creator might be telling you that dividend investing is the secret to becoming financially free, while another creator might be telling you that dividend investing is a waste of your 20s. And then you're also going to hear people that tell you literally to do nothing but buy the S&P 500. But who's actually right though? In this video, I want to break down the differences between dividend investing and growth investing. I look at the pros and cons between both of them, that way you can make your own decision. Before we get started, I do want to make it clear that this is not financial advice. Investing comes with risk, and to please do your own research. But let's start with dividend investing, because this is where a lot of people get started because they like the idea of the passive income and the cash flow that comes with dividend investing. A dividend is simply just a payment that comes back to the shareholders. So that means a portion of the profits are distributed to the shareholders. The really cool part about dividend investing is you don't have to do anything but click buy on your Robinhood, swipe up, and let the payments come in. You literally get paid just for owning a stock or an ETF. Now, obviously, this doesn't mean free money, okay? ETFs go up and ETFs go down, stocks go up and stocks go down. It's no different for dividend paying ETFs and dividend paying stocks. But if you're buying into quality companies anyways, getting a nice dividend payment along the way is always a great bonus. Most people think about dividend investing, they think about companies that have kind of been around forever. Think like Coca-Cola, maybe Pepsi, Johnson & Johnson. Businesses aren't really trying to figure out how to be profitable anymore. They're already making billions of dollars every year. So that means instead of taking every single dollar and trying to grow as fast as possible, return some of that money back to investors in the form of dividend payments. And the great part about ETFs is if you don't want to do the annoying research of going out and trying to find good companies that also pay a good dividend, you can just go into something like SCHD that pays a consistent dividend every single quarter and goes up pretty consistently as well. This way too, you're not betting just on one company, you're betting on dozens of different companies or a batch of different companies. So why do some people love dividend investing so much though? It's because of the cash flow, right? Like there's just something motivating about seeing that money hit your account every month. Wow, if you also picked a good ETF and a good stock, seeing that kind of grow as well with your dividends. Even if it's only 20 bucks, maybe next quarter it's 40, then the next quarter it's 60, then the next quarter it's 80, and so on and so on and so on. Over time, these payments can become very significant, especially if you're reinvesting them every single time. When you think about it, it's almost like watching a paycheck slowly grow itself. When people kind of tell me that dividend investing in your 20s is kind of wasting your 20s and throwing away your 20s, I don't really think about it like that. I think about it like kind of planting a seed, right? Because the sooner you can start in a good dividend growth portfolio, or at least an ETF, or at least a stock, right? You're planting that seed, and 10 years down the line, 20 years down the line, if you're consistently every single week dollar cost averaging into that specific ETF or stock, you're going to see that seed grow and grow and grow and grow into a bigger tree and bigger tree. And by the time you're 40 years old, that tree's going to be fully grown and paying you insane dividends without you having to do a single thing. And that's kind of one of my favorite parts about dividend investing, right? Is the snowball effect that comes with it. Say your dividends buy you a whole extra share of SCHD. And those dividends buy another share, and another share, and another share, and another share. And before you know it, you're buying like 4 shares of SCHD a year without even realizing it and still getting dividend payments. And maybe you got an automated investment going in every single week, every single month, and without you even looking or doing anything, you are just growing and growing and growing your dividend investments. Now, obviously, dividend investing is not perfect. If it was, everybody would do it. The biggest downside that you will notice with dividend investing is these are not going to be rocket ships taking off, right? These are going to be slow growing stocks and slow growing ETFs. But a pro to that con is when the market's going down or it's a really bad day for that kind of sector, ETF, stock, whatever it is, you're not also going to feel that heat as hard during those bad days, but it is going to grow a lot slower, making this kind of a little bit of a safer investment in that sense though, at least. While they may steadily increase over time, you're usually sacrificing growth with companies that are reinvesting every single dollar and trying to grow. Really hoping to double your money every single year, dividend investing is probably not the route for you. But if you're looking to kind of just get your feet wet in the market, a place to park your cash, dividend investing, in my opinion, is a great place to do it. And I would recommend doing some research on some dividend ETFs and some dividend stocks you might like. Now let's switch gears here and talk about growth investing now. This is obviously what people like. This is the more exciting one, right? It's kind of that little more of a gamble here with the growth stocks. Growth companies are companies that prioritize expansion over paying shareholders. They're hiring new employees, they're building new products, they're expanding, they're investing in research. Maybe they're even working out deals to buy other companies. When you think of growth companies, think Nvidia, Amazon, maybe Meta, Tesla, Microsoft. They're all usually companies people think about. These companies have spent years reinvesting profits into growth, therefore their share prices go up if everything goes to plan, right? And because of that, many of these companies have seen incredible stock price appreciation. But if you don't want to pick individual companies, again, there's also great growth ETFs like QQQ or SEHG. Or you could even do something a little safer like VOO, the S&P 500, or maybe even something like VTI that just tracks the total US stock market. But the biggest reason why people choose growth is simply just because of the potential, right? You're younger and you have 20, 30 years maybe before retirement. Many investors believe maximizing long-term appreciation is much more important than generating income today. Think about it this way. Rather collect a few $100s in dividends every year or own a little piece of a company that grows 10x in the next 10 years. But here's something I don't hear enough people talking about. Everybody loves arguing whether dividend investing is better than growth investing or growth investing is better than dividend investing. Very few people are asking the much more important question: are you actually getting the money to invest in the first place? Let's be honest, if you're only investing $50 a month, you're going to see growth, but it's going to be very slow. That's not very sustainable. You can do it, but we want more growth. We want to actually see this thing hit the ground running and the wheels get turning a little quicker than just $50 a month. Your investing strategy matters, but your income matters even more. Because without the extra income, you don't have anything left on the table to actually invest. You need to live your life. And a great way to get some extra income coming in is starting your own business. And the best place to do that is Vonza. You have a skill you know how to do better than someone else, make a course on it. Create a community about it. Maybe you're good at content creation. You have a decent following. Create a community on how to grow on social media. Charge monthly for it. Make a course on how to bake cakes properly if you know how to cook better than someone else. You can sell anything online. Vonza gives you everything you need on one platform to run and host your business. Whether that's creating a course, selling a digital product, selling a physical product, selling a community. You need to host your website, landing pages, some CRM, email marketing, SMS, AI agents, anything you can think of, Vonza has it under one roof for you. And the craziest part is you can literally get started for $19 a month today, and Vonza for a limited time is offering your first 2 months at a 50% discount. Think about it. If you can make a community, charge $20 a month for it, and you get 5 people to sign up, that's $100 a month coming in and $20 a month to start. So you're getting $80 a month coming in extra. Let's say you're already investing $50 a month. That's an extra $80 a month that you can go and invest now. And just imagine how much more income you'll have to invest once you get some more offers on the table and you start growing and scaling that business you have going. But let me know in the comments, guys, which one wins for you? Dividend investing or growth investing? Or do you think it's just safe to have a perfect balance of both? Or should you be a little heavier in one or the other? I think it just all depends on everyone's stage of life, how old you are, how much money you have coming in at the time. Me personally, when everyone asks me, I am young, right? And I'm actually a little more dividend heavy. I get a lot of my friends, a lot of my peers, they tell me, why are you so dividend heavy? You should be a little bit more in growth stocks. I don't know, I just like the cash flow aspect of it. But I think it's a great idea to have a perfect balance of both. You should have some dividends, plant the seed, set some automations up every single week, get them growing, but also have your feet wet in some growth stocks so that way you can kind of capitalize when things start going good. But let me know in the comments, guys, what do you do personally? What ETFs and what stocks are you in right now? But thank you guys so much for watching this video. If you want to do a deeper dive into Vonza and learn about everything it has to offer, hit that link in my bio, book your free strategy call with me. We'll go over everything Vonza has to offer, compare your current setup, see if Vonza can give you access to more tools, put everything under one platform, and maybe even save you money every year. Maybe you've been putting aside getting started with that business and you need some extra money every month so you can get that investment portfolio going. That link in my bio, book your free strategy call with me. We'll go over what plan will best suit you and how we can help you hit the ground running ASAP. But thank you guys so much for watching again. Don't forget to like this video, subscribe so you're recommended more videos, and drop me a comment down below, guys. Growth stocks or dividends? Which one do you favor? And let me know what ETFs and what stocks are you guys investing in right now. You guys have a great rest of your day though. Thank you so much for tuning in, and I will see you guys in the next one.